is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a great weekend. I sure did. Tried something new. I hadn't done this before. Started reading about eating beet tops. So, cooked them like spinach with a little garlic and raisins and extra virgin olive oil. It was incredible. If you've never done that before, do it. But you got to have fresh ones. I don't know if I went to Walmart and looked at the beet situation in there on the fresh beet section. I wouldn't have eaten those. So find some beets, cook them in a pan. You'll love it. I got to tell Nico and Paige about that I actually did something healthy. All right, guys. Good to be back here. Let's take a look at something. I want to immediately pull up the bean situation here. And my friends are just kicking. We're going to look at November beans, July beans. Very similar situation. As far as a new profile, lost my chart. Here we go. Let's get it back. All right. Okay, so we're back. Okay, so looking at the November beans, obviously, we've talked religiously about this breakout above 915 on the November contract and then the retest. But it's a really good primer for looking at things in a low volatility state on the long term. And some of the guys down at the grain guys down at the elevators that I talked to, they're always kicking themselves when they miss a move like this. This is a type of move. If you've been watching the show, Tom and I have been talking about this. Sometimes you let some of these trades breathe and do what they're going to do, and you make your whole year off of one trade. And these are kind of expected. If you just keep turning the wrench the same way and keep playing this particular game that we talk about every day. But we hadn't had any reasons to take off the trade until we started getting a yellow bar, yellow peel back, and that was actually in the scanner. I'm going to go into the futures section, and I'm going to look at soybeans here. So as you can tell, this is the July contract, but I want to show you that particular profile now is in force today, and that yellow bar, if you will, or yellow peel back in the scanner was appearing on Friday. So, okay, so here's the November contract, very similar to the July, which is what we have in the scanner because that's the front month. If you guys want me to change to November in there, I will. But, it's time to, these types of moves and these closes here, I think we talked about Steve Rhodes and candlestick patterns, and maybe he had some ideas or some assessments on that. I'd love for him to call in and talk about this. Steve Rhodes has never called in. I'm putting him on the spot right now. I'd love to talk to Steve Rhodes, as I love to talk to Steve Rhodes all the time. And that yellow peelback might have saved you some points and said, hey, you know what, you might have some better areas to buy this a little bit lower. So now 978 on the November contract is a little bit of a support mechanism here. A lot of times when you have these moves, we haven't really had a pullback yet for people who have been shorting into this to really get out of it. So this is the first pullback really on any significant level that people could start now contemplating whether they need to cover the worst trade they got into in their life on the short side. All right, so that's what we're dealing with. I don't think this runs over. I think it kind of got out of control. But 978 is a big number. 955 is a big number. So, again, if you're thinking about picking battles on this, I think you got it. I mean, we were at 1023 the other day, and now we've pulled back 55, 60 cents a bushel That's a decent move. And you've got an area to try to now buy support. Can play defense around this particular thing. We reached a low of 976. So again, you've got some decent inflection points now to pay attention to. And remember, this probably not everybody is out of this particular short trade yet who thought these things kind of went out of control too quickly. That's the story on beans. Let's take a look at gold. See, John in Philadelphia was posting something about that. Okay. Gold. All right. Well, this has been a little defeating. The dollar, we're going to have to reference that in a little bit and figure out where that's going to possibly head. But this 1242 was kind of a trading bounce situation. It obviously caved in. I was expecting more out of this. I didn't expect this reversal. 1243, excuse me, rounded off is going to now, these are areas to pick battles. Gold on the long term, it's a little nerve-wracking sometimes to trade gold, but on the long term, as you can see, here's a June contract, still longish. Not a lot of hints, no yellow peelbacks in the scanner on the weekly. The long trade is still, we're trying to block out the short side based on that alone. So again, still trying to buy support on any level and buy breakouts on any level on gold and try to block out the short side, not to get confused on what the long-term MO of the trade is. We got to hit crude oil really quick. All right, so interesting little situation already. Here's the June contract. And my charts are frozen. Okay, here we go. So we had that weekly close above 42.06. That was very powerful. We've got on the daily, let me go into the scanner. Let me readjust my charts, make sure you guys are seeing these. We're going to go into the scanner. We're going to have a yellow peel back happening here because they're starting to show in the chart, and these are hooked up to the same exact mechanism. So sit tight on that one. You should see that momentarily. So we've got a new profile attempting to appear. That'll be in the scanner again. I think this is kind of a wait and see on crude based on that kind of new supply profile popping up. Lost my chart again. Let me get that back up. Based on that new supply happening, that new balanced area, and the possibility that we probably need to come back and retest 42.06. I think crude's not a short. It's just a wait, block out the short side. Remember, those peelbacks are kind of target-rich areas for the move, and you've also had a close above the weekly. I think we just need to settle back now and think about 42 as support on this right now and a way to play defense. And hopefully by tomorrow, we'll have some new inflection points and a new daily balanced area that could possibly coincide with that 42 area. All right, guys, we'll be right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We're finishing up with crude oil there. I think we did. So, the only seemingly impacting news today is new home sales, and that's kind of probably going to be not that big of an event here. And we're going to take a look at the notes and the dollar as we talk about that. Come on. Why are these charts slow today? All right. So again, long term on the notes, we've talked about the breakdown that happened 130.07. Why is this? Tell you what, let me reboot this server here. I mean, not reboot it, but let me re-log into it. Sorry, guys. Here we go. It took longer than expected. You know what? Let me check something. It might be my computer. No, it's not my computer. Here we go. Must be the server bandwidth or something. Okay, here we go. So long term on the 10-year, you got big, huge long-term support around 29.02. Reached a low last week of 29.11.12. Man, this is upsetting. Okay, starting to act better here. Okay, so as we look at this, this is our daily. We're really in no man's land here. I mean, I'm not. After the breakdown and utilities really took a flush as this was happening. Coincidentally, at the same time, 130.07 was being broken. I just don't see a lot of direction here right now on the 10-year. I think it was a great trade for a long time buying the 10-year relative to the S&Ps. It seems like, man, I cannot get my charts to work here. Hold on. There we go. Tell you what, let's do this. Let's see what's going on. Okay, I think we're going to have to reboot this server. Let me do this. Let me switch to currencies really quick to not be babbling. Okay, here we go. You know what? This must be, let's see. All right, I think we're having bandwidth issues at the server farm. I apologize for this. We're going to try to see if the currency server's allowing me to reference it a little bit easier. Yeah, let's try to stick with this. Here's the Canadian dollar. No changes there, still negative. Crude oil may come back a little bit here, but I don't feel like you have a lot of leverage on the Canadian dollar, even to do a contra trade bounce, which will be the devaluation of it. Here's the 240s. This is kind of a no trade Monday morning here. Anything can happen. Here's the euro. This thing solidly broke down below that area we were kind of talking about after we'd had a close above. Now we've got a new profile that locked in last Monday. And right now on the euro, here's the daily. Don't really see a lot of leverage here. Kind of in no man's land, trading within profiles on the weekly. Got support right now at 111.43.44. And you've got a lid on it around 131.16. Okay, we're going to hit the Aussie dollar. This is, again, having a small pullback. This is another kind of mechanism to let the trade breathe until you see these types of mechanisms here. And as you look at this, as you look at this, we had that yellow peelback happening on Thursday. So that was a time to take off some weight off the Aussie dollar, wait for lower support areas. This could explore the entire fair auction down to 76.0809 right now. And again, you've got the 240s here. Nothing to really write home about. I think this is I hate to be a wait and see on everything today, guys, but you've got the long-term trend in the Aussie dollar still up without question on these weeklies. But you have a new profile you're dealing with here. He's in the balanced area on the daily. And I think, 76.0809 is big time support on that. You should still have some of that contract left on from before, or some of the weight of the position on from before. If it's a long-term trade you're looking for here, which is, I think, a great idea. Here's the Aussie dollar. No real scary mechanisms going on here on the long-term view. Let's take a look at the yen. This is one, we talked about shorting off this 109.61.62. Here's that daily, had a break in that. That's the way trading goes sometimes. Seems like we've come up and leveraged off of this 111.81 area, hit it and kind of backed off. Previous very long profile. Remember, the longer these profiles are horizontally speaking, the more these inflection points have relevance moving forward. And it's like an exponential moving average. You want to weight these most recent profile inflection points heavier. This is all in the scanner. If I go into the Forex section, I can get a glimpse of all of this. I'm going to go down to the JPY USD. And there's that long horizontal. There's that inflection point, 111.81 that we just spoke of. There's price action, real time. Here we go. So, and let me repost my chart in case I lost it. And here's the long term now. So we got back up into that area. That was really important. 111.81, 112.05. There's that weekly unfair load coinciding with that general area on the daily. And what do you do with it now? I'm not a big fan of being long this. I think you've got to sit tight and wait till we get now back at least cruising below 110.40 and hopefully 109.61. I mean, this is going to be a very volatile instrument right now. You're going to have to make sure you put your stops in. Anything can happen, especially, you know, these guys change the rhetoric, change the narrative, I should say, because that's the way everybody speaks this year. The optics, the narrative. Way forward is old now. But anyway, still not a fan of being long the end. I'm still going to stick by Joey, kind of hitting the target down there with some of the talks that we've had around 105, 106. So again, we want to kind of now wait. If you shorted against this 112 general area, then I'd put that defense above that general area. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Here's the Nikkei June contract, 17,331. Kind of had without question, a powerful move. While we're talking about the yen becoming devalued, again revaluing itself based on the yen getting stronger. God, I'm confused here. Hold on. Anyway. Let me just show you the 17,331 unfair high on the weekly, which has already kind of been outputted this week. There it is. And if you'll notice, we had a green bar, no yellow peel back happening. What happened was we eclipsed the entire new profile that was appearing. That's a super strong signal, and that's kind of a buy support kind of concept there. We're going to take a look at the S&Ps. Drifting a little lower this morning relative to Friday's close. Here's the weekly. You know, we talked in that webinar about a strategy to trade against here. Even though the breadth wasn't exactly, you know, starting to show some cracks on a long term, you got a major inflection point here, not to get shaken out of the trade. Shorting futures, buying in the money calls, and maybe getting a pullback into this 46 area again. But again, you know, if we're not exactly correct on that one, the insurance is in place, and it's great insurance. Here's the immediate support on the S&Ps right now, 2060 up into 2065. So that general DMZ is going to be your targets on the short side. You don't have a lot of leverage here right now. You know, weekly 2096, right in the middle of a fair auction on the daily, not a necessarily wide profile. And I've said sit on your hands on a couple of trades this morning already. This is probably another one. So take that in consideration. We're going to take a look at the XLU. Had a pretty big pullback off of this little puppy last week as the event of the notes were just, you know, happening below that 130.07. 48.47 was Custer's last stance on this one. Again, that's what stops are for. And as we look at the weekly, we were kind of looking for an entire exploration down into 46.04 before looking at this again. So that's the situation on the XLU. Yeah, Apple's going to announce iPhone sales tomorrow. And we're going to take a look at Apple. They're expecting much lower sales in the iPhone. And I got a Windows phone now. Love it. I'm going to have to call David White, and we're going to do a group hug on this one. I know he's a Windows guy, but very cool little phone. Was cheap, works great. The reason I have it is because Skype works incredibly well. Windows on Skype, so, or Microsoft on Skype. Don't understand why people would pay that much for an iPhone now, unless it was wrapped up in a plan. There's so many good phones out there for, you know, in my opinion, some of them doing better. I think we've got Dave from Clearwater on right now. Dave, are you there?
Group hug with David White? That's kind of creepy.
I know. It's Monday, man.
I think I'd rather do a group hug with a little 20-year-old cutie there at the Apple store, but then again, you know, that's just me.
Yeah. Well, you know, I hope Dave wasn't listening.
No doubt. I heard that. I'm like, oh, man, great guy and all, but I'd rather do the group hug with a 25-year-old cutie at the Apple store. But, hey, you know, to each their own. It's a brave new world these days. John, I caught your webinar, and lots of questions sprung up, but I'm just not a fast typer. And one of the questions I would like to ask, when you were talking, you know, from a strategy standpoint, you know, when futures, the leverage is, you know better than me, is huge. So a lot of times you were talking a minute ago with the S&P about, you know, potentially shorting the S&P at an inflection point and then buying it in the money call to kind of, you know, define and minimize the risk. Let's say, and my question is this, in your opinion, let's say you've got someone who doesn't trade the futures. I mean, I trade the futures, but I got some friends I'm trying to teach, trying to coach. And they're not going to touch the futures and shouldn't touch the futures because they're not there yet. But it sounds to me almost like you're recommending a straddle.
No,
you know, like an option straddle.
You mean on the S&Ps?
Yeah, like you're talking about basically, you know, buying, you know, in this case, buying, you know, a short position of some form or selling a short position, I should say, of some form and buying in the money calls. I guess my question is what ratio would you go in this scenario? Let's say you want to short it, you're at an inflection point, it may go higher, you're not sure. What ratio would you recommend, in your opinion, to say how many contracts of short position you would put on relative to how many contracts long you would buy as an insurance?
Well, Dave, that's a great question, and thanks for calling in. It's always good to talk to you. You know, at this stage of my trading career, I'm a big fan of not really having too much excitement, and I love these platforms now, the way they have, and I'm getting to your point in just a second. I love these platforms now, how they've got a lot of cool order entry functionality if you're trading the underlyings. And that order entry functionality is put the limit order in, put the stop order in, and the target in all at the same time, right? So you really don't have to worry about it. And I've got my original game plan. If conditions change, I can adjust it. But to even mitigate the stress or pain even further, and not being able to get shaken out of the trade sometimes when you've got a really serious long-term view or a major inflection point that you just want to, there's going to be some volatility around it. What I was saying on the S&Ps was, we've done extremely well, my company has, by being able to understand what the long-term view is relative to these profiles and when a major trend change happens. Now, that's not the case with the S&Ps right now. I was using, the 2096 general area as a weekly kind of major inflection point to just, in the webinar, to perform a certain strategy based on us kind of rising up really high, reaching some targets. And it may rattle around up here, but, the breadth is not exactly coinciding with what we need it to right now in the internals. But all that being said, it wasn't a straddle idea. It was basically, we want to be short the futures with unlimited upside. But I'm not a big fan of paying a lot for insurance. I mean, I get the highest deductible all the time. Just forget trading for a second. The Obamacare thing, the errors and emissions insurance, the professional liability insurance, the whatever. I've got a ton of insurance policies. I get a very high deductible because I'm not a big fan of paying, a lot of premium for the premium. So the thing is when I'm talking about buying in the money calls, it kind of, the deltas are a lot higher on those, obviously.
Exactly.
So if the market goes against us, if the futures go up, then the calls are increasing pretty much, not tick for tick with the futures, but a very good hedge. So if I had bought, for instance, the 2100 calls and the futures rally up, I'm not going to be covered as well as, for instance, buying like the 2080s. Can you hang around? We can keep talking about this.
Absolutely, because there's another question I'd like to ask.
Great. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Dave, are you still there?
Yes, sir.
Great. Yeah, what I was saying is I'm showing natural gas right now, the May contract. You know, on those type of kind of hedges where your deltas are a lot higher, you know, you're looking for more of a bigger pullback, obviously, to kind of eclipse the area of coverage, if you know what I mean. So like if the futures are, you're shorting the futures at 2097 or whatever, and you own the calls at 2080. The reason I'm such a big fan of that particular type of strategy on a long-term sea change of event type idea is that, and it works a lot better on the short side on the underlying, because when you get a pullback and you start having the market go in your favor, if that happens, your volatility index is going to increase, and therefore those calls are actually not just going to start evaporating, you know, in tandem with what's going on relative to the price. They're actually going to kind of somewhat hold their value because the VIX is going up. You know what I mean? So
absolutely. It mitigates the premium that you're paying
Right.
for the time value of the option. So let me ask you something. Let's say you get a nice break. Let's say it's, you know, like earlier this year when the market really started selling off in earnest. Excuse me. Would you, as a strategy, because I know what I would do, but I'm trying to incorporate, because I'm really, at the risk of sounding like 1960s here, I'm really digging the scanner, man. And I gotta say, it's really groovy. And so my question I got for you is, would you then close out that long position once it breaks past the unfair low inflection point?
Well, you've got a couple options, and you know, I've been a victim, not a proponent, but a victim of my own, you know, seeing too many things there and wanting to complicate a very simple position that's already done its job. So the complicated answer is you can go, you know, you can take a position and turn it into a free trade. All right. I mean, you know, for instance, if we've got to move up and you're long soybeans, you know, you can start legging out of some of this on the long term to kind of take some off the table, and then you've got some things left on. You're playing with the house's money, if you know what I mean. Right. So on the pullback on some of these, you know, strategies like we spoke of, let's just say the S&P is short 2097, calls are at 2080. Let's say we're getting down into the 2055s area. All right. Now you're looking at the bottom of some new profiles. I'm going to go back to the S&Ps. This is actually a great question. Let me go back to the S&Ps on my chart. Let me just show this. And this is all in the scanner. I'm just showing these signal charts. So let's just say we do get the break and we do get the exploration down into this 2059, 2060. I'm going to be looking at the breadth to see if we started having any cracks in the armor there. That's the first thing. Because if we start having some discombobulation between the weeklies and the dailies, you know, I'm not going to be as mega excited about buying this support area. Therefore, I mean, if they're both still positive, I'm going to be like, okay, wow, yeah, this is probably a buy support area. And therefore, you know, that original short futures long call situation, you're going to start giving back, you know, as we bounce. So as we get down, for instance, into the 2060 area, I might want to say, you know what, this trade kind of looks a little non-directional now because the breadth didn't really crack. We kind of got the move initially that we wanted. I mean, on those type of scenarios, you really are looking for pullbacks more than this. This is kind of almost, you know, just trading within the balance here on the daily. But you can go in because the premium of the VIX might have, you know, edged up a little bit. You can start selling some premium on the bottom side around, let's just say 2060 puts or even lower, because you've got the hedge on for the most part. And you need to look at, Thinkorswim has some great exploration type mechanisms in there where you can put in what if scenarios and get the graphs of what happens as the price moves around. I think Kevin Hinks does a really good job with that on a, you know, at lunchtime. Have you ever watched their show?
Are you kidding me?
Okay. All right. So you might want to pose that question to them, and just have them kind of put up that scenario, and they'll be probably more than happy to do it. But as you can, you know, you can complicate this thing by kind of putting another wing on, if you will, by selling puts to kind of lock in. But what has kind of happened already, and as these, you know, things kind of gyrate around, you can kind of play around with these hedges. So one of the, I mean, it's not fun, but I would call it interesting, is to kind of have a non-directional trade on where it's totally free and you've already made money, you've already locked things in, and you're just playing around with the hedges. Maybe as the market goes up, you're buying back some of those puts. Maybe as the market comes down, you're taking off some futures. But the risk of complicating this, and trust me, some of the guys
you're doing it right now.
Yeah, the risk of it is to get into a position where you're feasting on the volatility or the movement of the underlying, playing around with those hedges, and then somehow becoming more and more directional and not staying somewhat delta neutral.
Which is great if you got like a consolidating market, you know, that's where you've got a pretty tight trading range, and you know some premium's going to come in. You can try and capture some of that premium. But it seems to me, just throwing this out for consideration, and John, this comes under the takes one to know one category in life. So you must have a strong mathematical background. I think I heard you mention that in the past. I'm an engineer, and the thing is people who are, you know, dealt in the math as much as you and I have, you tend to, at least I'm speaking about myself, you tend to kind of overthink it, you know?
Correct.
You take a strategy that can be simple, and then you start making it complicated.
Because
you tend to analyze and say, well, what about this and what about that? So in the interest of trying to, as my father, who was in sales, used to say to me, keep it simple, salesman.
Exactly. Or another way,
Yeah, exactly. There's another way to say that, but I can't say that over there. I guess what I'm trying to say is I'm trying to teach some friends of mine some basics of trading and trying to capture trends, you know, and things to look for when you see a change in trend. And the thing I like about the scanner is basically it captures the volume price data, puts it in a visual format, takes the years it would take to get to a Tom O'Brien-like level of analysis, and puts it in a very visual format that, you know, a fifth grader can see. And it seems to me as a strategy that when the market's moving at tops, you know, and that's pretty clear to see on the chart, like what we're seeing right now in the S&P, for example.
Right.
That, you know, you might say to yourself, it's reasonable to conclude that the market's overbought based on the volatility we've seen over the last, 8-9 months now. It's reasonable to conclude that there's probably a shorting opportunity. So what I was teaching some of these guys was, okay, as a strategy, here's a straddle. And, and what I've been telling them is, for every contract you want to short for, let's say you're buying the put.
Well, that's not really a straddle. That's not really a straddle. That's more of a directional short trade. Straddle will be buying puts and buying calls at the money. Can you hang around? Because
yeah, absolutely.
John from Philadelphia, and I want to grab him too, but if you can stay on, that'd be great. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Dave, you still there?
Yes, sir.
And John from Philadelphia, are you there? He's not? Okay. Maybe he dropped off. I want to, Dave, if you can, I want to pull up June natural gas.
Oh, man.
Now, well, I mean, I'm going to make a point of how, this is what I would call a break-in trend, okay? And the reason I'm showing this is to kind of hopefully answer your question maybe a little bit better. Here's let me get my chart back up here. John from Philadelphia, are you on the line also with us? Okay, maybe you got your mute.
If you need me to hang up, John, grab
No.
I
I think this is a great question for actually kind of kills two birds here. This is what I would call a sea change event. We broke above profiles. We've closed above on natural gas, and now this is the type of scenario you might not want to be shaken out of as far as being long and staying with a serious sea change event, in my opinion, that's already happened now with natural gas. We've talked about not messing around with this thing until we had some weekly closes above profile. Well, that was a pretty serious thing that happened last week. So, Dave, this is really what that strategy is the most powerful for. I mean, this is a long trade, obviously. Okay, I think we've got John now. John, you there?
I am.
Great. Good to hear from you again. So Dave, on the S&Ps, that's not really considered a straddle. It's considered a directional trade, just as it would be here for natural gas in buying the underlying and buying the in-the-money puts. The problem with this particular type of trade on the equities on the long side directional trade is when you have a move up, if we've been just getting killed, and we're down into a major inflection point, I'm sorry, I'm having a little technical issue. The problem with buying the S&Ps and buying the in-the-money puts is when the market starts rallying, you don't get the full benefit of the VIX increasing, and therefore those puts holding value like the calls would hold value in an opposite manner, being short the S&Ps and long in-the-money calls. You know what I mean? We lost David in that switch. Okay. No problem. Okay, I think we transitioned from David. Okay, we'll try to get him on tomorrow. John from Philadelphia. I got natural gas up.
Hello, John. I'm here. Can you hear me, sir?
Yes, sir. I'm sorry for not understanding who was on here, but how are you?
I'm very good, John. Real quick question for you. Using your techniques, please, daily, weekly. Where is the buy for you on June Nat Gas, NGM6?
Okay, so the big line on that contract was around 207. That was where the weekly breakout, and we had a close above finally. I think, again, here's the daily for highs, 2.114. That's big time support. You're kind of breaking. Yeah, that's that. I don't trade natural gas a lot. That's kind of what I would consider to be. We broke out. We're looking to buy pullbacks. That would definitely be the pullback 211 or 2.114.
Any price points to leverage off on the weekly chart, please?
Yeah, the weekly would be 2.072. John, I hear the music.
Excellent.
Thanks for calling in. Great calling that bean trade, by the way.
Thanks, John.
You're welcome. Thanks, guys. Stay tuned for Larry. You'll thoroughly enjoy it. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.